Welcome back to our setup and plan. And this is our setup and plan on gold. First thing first is market structure. You have to understand where the market is moving, external structure and internal structure. And our external structure is always 1 hour. So if you remember very well, we had our last break of structure to the upside. Then we had our change of character to the downside. Then we had our continuation break of structure to the downside. Super simple, right? And that means this is our swing high. And this is our swing low. So we can clearly measure out our premium and discount zone. And I would like to see the gold prices coming back to our premium prices before we look for that shift, then we start selling. But it's not a must that the price always has to pull back to that premium zone or discount zone before buying or selling. So sometimes it won't even come back to that premium zone. That's why we have our point of interest, the supply and demand areas and the order block areas, right? And our closest order block is here. And that closest order block had a very nice reaction. That bearish order block, although you have more order blocks like this one, like this, or like this, like also this one is an order block, like this one also. Also this one is an order block. All those are bullish order blocks. But how do you know that you're going to use this order block or you're going to trade from this order block? It's the confirmation, the entry confirmation, the final entry confirmation. And we have two entry confirmation. The first one is the liquidity sweep confirmation, where we have our liquidity sweep to the upside. Then we get our market structure shift. We can call it the change of character. Then after getting that market structure shift or the change of character, then you look for that 5 minutes, 15 minutes, 30 minutes, 1 hour fair value gap. Then you trade from, right? It can be 30 minutes, can be 15 minutes, can be 5 minutes. It can even be 1 minute, right? It can even be 3 minutes. So that's our first entry strategy, entry confirmation strategy. Then the second one is the candlesticks. How do you measure the candlesticks? Like let us show like here. The price came mitigated to that inside that bearish order block. Then we had to go down to that 30 minutes, and you clearly can see that we had that break to the upside. But still, that one is also very nice. That candlestick order blocks, candlestick confirmation, sorry. So we can even test out with this one, the 1 minute or the market structure shift. Can go down to 1 minute and you can understand that you can see clearly that you had the liquidity sweep, which is here. The liquidity sweep, price came and swept that liquidity, and then it came and had this change of character to the downside. So my entry is just going to be inside, just here on the 5 minutes F imbalance, which is here. And after that, you can even see the 15 minutes still have that fair value gap. It's still up here. Then for gold, it's better we use the 15 minutes fair value gap. It will be more clear. And I'll just put my sell limits here with a proper risk management plan just above that order block that the price reacted from. You can even have a tight one, but I prefer this one for now. And if it's too big, you can have a tight one just above the liquidity sweep, right? Then you target all that liquidity up to the swing low, and with the risk to reward, which is 12R. Even if you lose, let's assume you have 10 trades and you lose 5 and you win 5. That means if you risk, let's assume you're risking 1,000 per trade. That means even if you lose five trades, that means that's $5,000. Then and you win each trade, you win 12K. Is it? Yeah, you win 12K. 12K USD times 5. That's not like 100. 100. Is it 100? Is it 80K? Something like that, right? Minus the 50. Still profitable. The most important thing is to have that risk reward. Then that's scenario number 1. Then scenario number 2, if the price disrespects this order block, then you're going to be targeting using this one. If disrespect that order block, then you're going to be targeting using this order block. So the most important thing is what? Is to be patient and understand the market direction, risk management plan, and to be patient enough to wait for those A+ setups and that entry and that confirmation, right? Then if you go to GU,